Hello and welcome to the market at midday on Monday, the 17th of February. I'm Lel Smits for the Finance News Network. Following 5 straight weekly losses, the Australian share market advanced almost 4% over last week and has continued to move higher this morning as reporting season rolls on. Today's rise comes after Wall Street's major indexes recorded their second straight week of gains as US investors shrugged off disappointing economic data on Friday. While the benchmark has come off the morning's high, it is still trading near the year's high, along with the local currency, ahead of tomorrow's February board meeting minutes from the RBA. Across the sectors, most are on positive territory, led by the materials, charging ahead on higher commodity prices. Telcos have moved lower and financials are dragging as Commonwealth Bank trades ex-dividend today. Across the board, the S&P ASX 200 index has gained 15.6 points and is sitting at 5,372. And on the futures market, the SPY is currently 29 points higher. Now, turning to economic news, ratings agency Standard & Poor's has named Australian banks as among the world's 5 most stable. A new report from the agency claims Australia is currently one of the 5 least risky banking systems of the 86 for which Standard & Poor's has published banking industry country risk assessments. S&P also says its most likely scenario for this year is a year of continuing investment-grade ratings resilience. Making company news, and as earnings reports come in, Bendigo and Adelaide bankers reported a fall in first half profit, but maintained a stable outlook on the back of improved cash earnings. The regional lenders' interim net profit dipped almost 5% to $180.7 million. In the same period, cash earnings lifted 9.5% to $185.9 million. Managing Director Mike Hurst has forecast stability and for the focus of competition to shift from deposits to assets. A fully franked interim dividend of 31 cents per share has been declared. Shares in Bendigo and Adelaide Bank have risen 1.19% and are trading at $11.86. UGL has reported higher interim earnings and flagged plans to split its property group DTZ from its engineering arm through a demerger or the sale of DTZ. The engineering contractor's net profit gained 13.5% to $29.5 million in the first half as revenue rose 5.6% to almost $2 billion. CEO Richard Lupin says UGL is currently being repositioned for softer domestic market conditions with significant restructuring initiatives underway to protect margins. The board has nominated to conserve the company's cash position and an interim dividend will not be paid. Shares in UGL have dropped 5.79% and are trading at $6.67. Across the sectors, the best performing sector is materials, gaining 94 points to 10,552. Shares in Resolute Mining have risen 8.78%, trading at 71 cents. Shares in Medusa Mining and Devolution are also stronger. The worst performing sector is Telco Services, easing 5 points to 1,805. Shares in Telecom Corporation of New Zealand have fallen 0.88%, trading at $2.25. Shares in iiNet and M2 are also lower. Finally, to gold and the dollar, the price of gold jumped $18.40 overnight and has firmed $1 this morning to $1,320 an ounce. The Australian dollar has stayed strong above 90 US cents thanks to Chinese lending data out over the weekend, but pulled back slightly this morning and is buying 90.47 US cents. Thank you for watching the market at midday. I'm Lel Smits for the Finance News Network. Have a lovely afternoon.